My friends, to another edition of the Heritage Wealth Planning YouTube channel. After a couple episodes of talk about software and website development, I want to get back to a pet peeve of mine, which is Social Security taxation, because this gets overlooked all the time by people, and it should not be, because the vast majority, maybe not the vast majority, the predominant amount of Americans in retirement are getting the bulk of their income from Social Security. Now, Social Security is taxed very favorably. I've talked about multiple episodes on my YouTube channel. But once you break the threshold, not only are you subject to federal taxation on your Social Security benefit, but here I'm going to share with you an article I've just read in Kiplingers about the 13 states that also tax your Social Security benefit. And so you may think you're out of the woods because you're not paying any federal taxation or minimal federal taxation on Social Security. Yeah, let's think again. So let's get right into it. So I'm going to minimize myself here. Kiplingers is such a wonderful online or hard copy. I cannot recommend it enough. They're just 10 times better than Forbes. What's the other one? Money Magazine is a joke. Don't buy Money Magazine. I just can't take it. Forbes, a lot of self-interested writers in Forbes I've noticed over the last couple of years. I don't think it used to be like that, but maybe it was, and I was just too ignorant to know. But it seems like a lot of people writing in Forbes have stuff to sell you, and I'm not even sure if they pay to get in Forbes. I don't know, but Kiplinger's, I'm telling you, this is fantastic. So here's the one from Sandra Block that was written February 15, 2018. 13 states that tax Social Security benefits. I live in Georgia. So first and foremost, just to get out of the way, in Georgia, we do have a state income tax. Trust me, I see it every year and I pay it. Once you hit 65 years old, though, if you have $65,000 of income that is just wiped away from your taxes. If you're married filing jointly, you double that, and 65 times 2 is 130, right? Yeah, 130. So if you're married filing jointly, you can have $130,000 of income and not pay a penny to Nathan Deal and the good governor of Georgia, which is pretty fantastic. So I just want to get that out of the way. And I don't know what these 13 states are. So we're going to look at it together for the first time, as it is of interest. So Ms. Block says, and I don't know Sandra Block. I wonder if I've come across her writings before. The name sounds familiar to me. I have to look her up. Are Social Security benefits taxable? You better believe it. Uncle Sam taxes up to 80% of your benefits, as we talked about, depending on your income, as we talked about. Remember, provisional income, my friends, provisional income. It's all the income that you have, which includes tax-exempt interest. Remember, tax-exempt interest is tax-free from income taxes. It is not tax-free when it comes to how much Social Security taxes you're going to pay. I cannot stress that enough. I will die going to my grave stating this until they change the law, which I guarantee you they never will, because Social Security is not in good financial shape. Again, Medicare is 10 times worse, but Social Security is in bad shape too. And they're only going to make it more means tested, which means more and more people are going to have to pay taxes to get their Social Security benefits. There's just no getting around that. So with that said, the provisional income laws are based on the 1983 tax law that Reagan signed into law. I forgot the name of was it Tax Reform Act of 83? I can't remember. It was 1983. Clinton signed it again in 1993 to increase the level. So Reagan signed it to allow up to 50% of your benefits to be taxed once you breach a certain income threshold. That certain income threshold has not changed since 1983. It was not indexed for inflation. The biggest tax trap on middle and lower middle class taxpayers there are. If I ever hear anyone running for Congress or Senate or president, they say they're for the middle class. They're not talking about getting rid of this insane tax system. I'm going to lose my head, because that is the biggest tax trap on lower middle class people there is, bar none. Now, on top of that, Clinton signed it, so not only is 50% of your taxes or Social Security subject to taxation once you break that threshold, but 85% once you can break a secondary threshold, and that's where we've been ever since. Republicans and Democrats, no one's done a doggone thing about it, and it just ticks me off. But anyway, all right, so here we already talked about the feds, how they tax you. And so now we're going to talk about the states. And what Ms. Sandra says is Vermont treats Social Security benefits the same way as the feds, which, again, we just talked about, so I won't get into that. Other states tax Social Security benefits only if income exceeds a certain state-specific threshold. For example, Connecticut, if your income tops $50,000, or 60 if you're married filing jointly. So 50 if it's just good old Josh, or 60,000 if it's good old Josh and Charlotte. So not very much of a divergence there. Then you're going to be facing with Social Security taxation. So let's talk about each state, break them down. The first one they talk about is Colorado. For beneficiaries younger than 65, unfortunately, that's the vast majority of beneficiaries of Social Security. They take it at 62, and for the love of me, I wish they would not do that. My friends, people are living longer and longer and longer. The Social Security under FDR was based on the old German system, the Kaiser, when the life expectancy of people was basically in their early 60s. 65 was the retirement age. Coincidence? No. They said at 65 you can retire. My phone is ringing. Let me turn that off. They said at 65 you could retire, but at 62 your life expectancy, most people would be dead. Thus, they did not have to pay much in terms of Social Security. Sorry about that phone interruption, my friend, but we'll keep plugging along. So now Connecticut, or Colorado, for beneficiaries under than 65, up to 20% of the Social Security benefits can be excluded, along with the other retirement income. Those 65 and older can exclude benefits and other retirement income up to $24,000. So once you hit $24,000, and once you hit 65, you have a little bit higher exclusion amount, $24,000, and that's not much. If you have required minimum distributions, now you're not going to have those until you're 70. I get that. But if you have RMDs and now you're 70, it's not going to take much to get you a threshold above $24,000 when you add in your Social Security benefits. So just keep that in the back of your mind. And I'll have individual YouTube videos on each state's tax system because they do talk a lot about sales tax, property tax, and whatnot down here as well. But right now, I just want to talk about Social Security. 2, this is Connecticut. Did we just talk about Connecticut? Yeah, the phone interrupted me, so it kind of threw me off. But all right, so yeah, we talked about that. So states adjust gross. There we go. So if you have adjusted gross income less than $50,000 for married taxpayers, let's see, Social Security is for individual taxpayers, adjusted gross income of $50,000, and married taxpayers over $60,000. Yeah, we just did talk about that. Then your Social Security will be subject to taxation. That's starting to get up there a little bit. So that's a little bit better than $24,000 and $20,000 in Colorado. But again, that's Connecticut. $50,000 for single, $60,000 for married filing jointly to pay taxes on your Social Security. That includes all income. Remember, AGI is adjusted gross income. That is before any deductions, itemized or standard. It doesn't matter. AGI is your top line adjusted gross income. Your taxable income is after you take into consideration exemptions, deductions, either standard or itemized. So it's not hard to get your AGI above $50,000 or $60,000 in Connecticut. That's for sure. Kansas, Social Security benefits are exempt from Kansas income tax for residents with a federal adjusted gross income of $75,000 or less. Not sure if it means if I'm married, my wife Charlotte, do we both get $175,000? I don't know. I'll have to dive into that deeper in a different topic here. But it says $75,000 or less, you're exempt from paying Social Security taxes, a tax on your Social Security benefits. If you're married filing jointly, my presumption would be that's $150,000, but I don't know the answer to that. So we'll have to dive into that when I do a deep state-by-state analysis. Minnesota, Social Security income is taxable, but a married couple can subtract $4,500 of their federal taxable Social Security from their state income. Great. The break is $3,500 for single, and don't ever file. It very, very rarely doesn't make sense to file head of household, so I'm not going to talk about that. Make more than $77,000 of income for married filers, and the break gets phased out. Hey, great. And it's gone for those with taxable income roughly $100,000 or more. So there you go. Basically, the first $4,500, married couple can subtract $4,500. I don't know if that's per person. I don't think so, because $3,500 is for a single. So basically, Minnesota taxes the bulk of your Social Security benefits for sure. If you make more than $77,000 for married filers, then you don't have any benefit whatsoever. So that's fantastic. All right, so here we go. Missouri, Social Security benefits are not taxed for single taxpayers with AGI. Remember AGI of $85,000 or lower, and married couples with AGI of $100,000 or lower. So that's a lot more favorable. Again, not as good as Georgia, because Georgia is $65,000 per. You don't pay any income tax. And that's just income tax. I'm only talking Social Security tax. In Georgia, it's $65,000 per. In Missouri, it's $85,000 for single and $100,000 for married, which essentially is a married penalty because both taxpayers don't get $85,000 times two, which is too bad. So essentially, if you're married, the second spouse only gets $15,000 to wipe off the mat before that person has to pay taxes on their Social Security benefits. Still, that's pretty favorable. $100,000 married couple of AGI before they're paying Social Security taxes. That's not bad. It could be better. All right, let's see. So now we get the advertisement here. We're going to skip ahead and see where this takes us. Montana. Social Security benefits are taxable. The taxable amount may be different from federally taxed amount because Montana takes some types of income that the federal government does not, and vice versa. So I have no clue, but there are no specific exemption for Social Security in Montana. So if you are a rich guy like Ted Turner and you own all that land in Montana, you are paying taxes on your Social Security, as well as Aunt Mabel, who's living on $2,000 a month. Take it for what it is. Nebraska, state tax on Social Security. A taxpayer may subtract Social Security income included in their AGI if a taxpayer's AGI is less than or equal to $58,000 married or $43,000 for all others. Again, a marriage penalty there. The state of Nebraska, if your AGI and you're married is over 58, you will pay taxes on your Social Security. If you're single and your AGI is over 43, you will pay taxes on your Social Security. Let me just reiterate why there's a marriage penalty here. Because Charlotte gets a $43,000 deduction, Josh gets a $43,000 deduction as individuals, but the minute we join together as a married couple, we only get a $58,000 exemption. That's a marriage penalty, bar none. That's a marriage penalty. If we stayed separate, we'd get a whole lot more exemptions on Social Security taxes and other state income taxes as well. So when they talk about the marriage penalty, that's it in a nutshell. All right, New Mexico. Benefits are taxed, but Social Security income can be included as part of an overall retirement income exemption of $8,000 per person. Thanks, New Mexico. So $8,000 per person. That sounds like there's no marriage penalty. $8,000 for me, $8,000 for Charlotte as a retirement income exemption. Presumably, that will be all Social Security. I guess if you didn't file for Social Security at 62 and you had $8,000 of distributions from IRAs, presumably that would be clear of taxation. Once you break that $8,000 threshold, though, your retirement income is taxed according to Mexico state income tax laws. North Dakota, benefits are taxed to the same extent as a federal tax return. So remember, we talked about that in detail. I'm not going to get to that again here right now. Rhode Island's in a great shape. And by the way, Connecticut's not in great shape either. Hartford's about to go bankrupt. The whole state of Rhode Island's about to go bankrupt. Hard to imagine they're not going to get their money somehow, but the people left there. It's a beautiful state. It's just poor because they've overspent, as many states have done. Rhode Island doesn't tax Social Security benefits for single. Well, that's pretty good. I'll give it to them. Rhode Island does not tax Social Security benefits for single filers with up to $80,000 in AGI, and joint filers with up to $100,000. So that's pretty good. That's pretty favorable from a tax perspective for Rhode Island. I'm actually surprised it's that favorable. I would not bank on that being that favorable going forward because they are in a hurting unit for sure in Rhode Island when it comes to their pension obligations. I would not expect that to be the case 5-10 years from now. Well, let's see. Means testing of Social Security is going to be here, and this is an example of means testing right there. If you have married filing jointly and you're over $100,000, you pay no tax. If you're $101,000, you start to pay tax. That is an example of a means testing of a tax regimen right there in a nutshell. What else we got here? So we got Utah. Social Security benefits are taxed. Benefit may qualify for retirement income tax credit, but they don't tell us what that is. So let's just assume Social Security benefits are taxed. And then we got the good state of, let's see where we got here. We got another ad, and this is from Geico. Man, Geico spends a lot of money on ads. Do you know what Geico stands for? Government Employees Insurance Company, by the way. I don't know if y'all ever knew that, but GE, Government Employees, Insurance Company. You don't have to be a government employee anymore, but that's what it used to be, Geico. Vermont, state taxes on Social Security. Social benefits, we already talked about this, benefits are taxed to the extent they're taxed at the federal level. And again, we're not going to get in that again here today. And lastly, West Virginia, Social Security benefits are taxed to the extent they're taxed by the federal government. So there you got the 13 states from Kiplingers that tax Social Security benefits. West Virginia, Vermont, those states like that, pretty favorable. A couple of states not so favorable. A couple of states surprising: Missouri, Nebraska. Couple, even Rhode Island. I was surprised that they don't tax Social Security. They're pretty favorable there. Massachusetts is not on this list. I was surprised to see that as well. We'll have to dive into one more state by state specific, because one of the things that, well, give you an example, Delaware. Now, I don't know what their tax system is right now, but I do know their property taxes are quite low. So if your kids are out of the house, you're empty nesters, and you live in Pennsylvania, a lot of times they're very favorable for you to move to Delaware, because the property taxes are incredible. I think one of the lowest in the country is Delaware. So you get the benefits of Pennsylvania. I mean, Philadelphia is just right up the street, but you get the tax system of Delaware in terms of the schools and whatnot. You're just not paying the schools tax. Now, some will say that's the reason why Delaware schools are so poor. I don't believe that for 2 seconds, but I get the argument. But at the end of the day, if I'm retiring in Pennsylvania, let's say Buck County, Pennsylvania, I'm like, man, my kids are out of school. I'm not even retired. I just commute to Philadelphia every day. I'm packed up and moving to Delaware. Heck yeah, I save a boatload of taxes from property tax. Now, the state income tax, off the top of my head, I don't know. We'll run comparisons here later on to talk about that. But as we sit here today, that's not a bad move when it comes to the overall burden of your taxation. Notice that neither Pennsylvania or Delaware showed up on this list, so both are favorable when it comes to Social Security taxation. The question is, how favorable are they going to be when it comes to income tax and other things? To be determined. Stay tuned to the Heritage Wealth Planning YouTube channel. Hopefully we don't get further phone call interruptions, but I can't break my train of thought, or else I'll have to do the video all over again, and I don't want to do that. So hopefully this is helpful to you. As always, subscribe. Hit subscribe, that red button down below. Thumbs up help me immensely to promote the channel. Don't forget to tell your friends and share the episodes that we do for sure. And then hit the notification button, the little bell that says be notified of future content. Lastly, all this stuff can be found on my heritagewealthplanning.com, heritagewealthplanning.com under the blog. So you look up that Heritage Wealth Planning, you'll see the big Building Sustainable Wealth logo. And then right to the right up top, you'll see where it says blog. So click on that. You'll see everything we do, from podcasting to videos to blog posts as well. Everything we do will be on there. So go ahead and click on that as well. Hey, look forward to seeing you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.